What is going on, everyone? It's your boy Tony here at the weekly close, here to report on the art of the chart and share the latest trends, thoughts and analysis from different minds all in one place. So in week 3, title of this episode, we're looking at the S&P 500 potential rejection, looking at how Bitcoin's playing out of a bull run or a trap, and some of the on-chain analysis and whether there are some potential green shoots. So let's kick this week off with a video earlier in the week from Game of Trades titled S&P 500 internals are flashing a major signal. And the major signal in question is the advanced decline line, as we're shown advanced decline line on the bottom here against the performance of the S&P up above. Generally recognize the advanced decline line as an indicator showing underlying market strength. So the interesting thing about kind of in its history, how it any kind of divergences have kind of preempted any kind of run ups or slowdowns in kind of market activity. So in the sense of kind of like looking at the NYSE's performance against the ADL, looking at some of these kind of divergences of this line on the bottom being the ADL, the advanced decline line showing, like ongoing strength when there was kind of maybe flatlining price market activity, which that did continue, or flatlining price, but again further ADL strength, which led that up to a higher price, and then maybe price peaking, while that's kind of quite in line, but this ADL flattening out ever so slightly against that price action, or in this sense lower highs against higher highs on the ADL, which kind of preempted this continued run in this one in price. And then I guess what is kind of coming into question is this guy right at the end of the chart, where we have a flatlining advanced decline line, and at the moment we just have at least an ever so slightly advancing price on the S&P, so a kind of preemptive indication potentially, looking at that against other indicators, looking for some kind of coherence in the market. Is this kind of preempting actually a kind of slowing down? And we'll put this against some other thoughts in other videos in just a moment. Second kind of like quick fire few rounds from FX Empire. They kind of released a few really good videos, those 1 minute analysis on the Euro USD, the S&P 500 and gold. So this is the first one that they just kind of shared from the Euro USD, generally just about this upwards channel that it's traveling in, and kind of preempting this pullback at the moment down to the these being the Fibonacci levels that they've pulled out, but preempting a kind of pullback to the 3.82 or the 0.5 at the moment within this channel. And I guess that can be further kind of supported by the fact that there is on the RSI, this being on the 1 day chart, a bearish divergence where we've got price forming higher highs but the RSI forming lower highs. So a return to those levels within this upward channel seems incredibly plausible. The second chart right here we've got is the S&P. Again, we've just got this showing a performance over the last year. All of this movement anyway in the meantime being in a downward channel. We reached higher resistance that was called into question. Again, we've got the support right now here of the 50-day EMA, but that really being tested, and if that kind of does fail as support, we can expect this going down to standard technical lines of support and resistance. So this kind of price line just highlighting what was previously support, resistance, support. If the 50-day EMA doesn't hold up, and it looks like we've got the official rejection on this upward trend channel, we can expect a test of the 3800, and if that fails, down to a further technical. Oh, sorry, not sure what happened there for a second. My screen just went blank, but we'll persevere. Or we could expect a further test down to the 36,500 level, and if that falls, further movement down within this channel. And then finally, this is just kind of a quick analysis on gold. Again, we've got the 50-day EMA crossing the 200-day EMA, suggesting positive growth, price movement in an upward channel. suggesting something of a breakout, but a bit of a pullback, and some thoughts about that kind of moving within. Maybe this upward channel does continue to extend, and we're going to see this movement kind of continue maybe sideways before progressing further up, if that continues to be confirmed in the crossover of the EMAs. And then earlier on in the week, there was a kind of dedicated video from Marzel Money on Solana price action. We've obviously seen this enormous kind of run up in well, quite recently, within the last couple of weeks. And the kind of question of obviously this playing out as a traditional bullish bull flag, but the kind of what's interesting kind of looking at this is, while this looks incredibly bullish in the sense of taking price all the way up to $38 in quite a short space of time, Solana's lows being into the single digits not so long ago. Looking at on the higher time frames and higher kind of channels of support and resistance, it's all very good saying that flies up to $38, but then that talks about breaking out of not only this downward channel, which as a larger pattern is bullish on a long term, but he pointed out, I thought quite and quite rightly so, it's breaking out a second level of resistance as well in this line across kind of the $34 mark. And for anybody looking on kind of like the higher weekly timeframes or whatnot, a lot of resistance. But since this video has obviously come out, we have seen a break above that out of this channel, it hitting weekly kind of resistance. So it'll be interesting to see what the next 5 days have in store. We'll be able to breach that kind of $34 mark to kind of see this moving even further. And just kind of like pointing out these kind of important levels. And the kind of thing he highlighted, this is what's quite interesting. It's all very well everybody making their predictions, but at the same time, we don't always get them right, nor are we expected to. But it's just interesting. This has played out now, and this trade, didn't work out because we saw price reach $26, which is where the stop loss was being placed on this guy. But like we always kind of say, risk to reward ratio was at was about a 4x multiple. So you only need to win one to gain your losses on 4 losses. So nonetheless, so just to say, that did break up the channel. We have hit $26, but now it's coming out, sitting on this upward resistance line as support. So it'll be interesting to see how that, are we going to fall back into this channel, or is that going to hold out further for any kind of sideways or upwards action? Let's see what happens in the week. Moving on to Traders Reality. This is a video that was released called Can't Stop This Now. And what I love about kind of Tino's videos, always likes to kind of remind us about the kind of the bigger picture, the role of the market maker, and at least on this kind of liquidation heat map, price is going to go to where there is liquidity at the end of the day. We know market makers exist. For anybody who's obviously been keeping a track on the FTX collapse, it was their sister company Alameda, which was a market maker providing liquidity in the markets. So here just kind of pointing out, $6 billion worth of liquidity kind of just sitting just above $21,700. We know that price has not only hit that, it's crashed up higher. So price is gonna gravitate to where these pools of liquidity are. And for that reason, we should always just remember there's 15 billion of liquidity sitting and waiting at 15.2k. Hence why some of the people calling for, especially while there's generally greater, weaker sentiment across the markets, Bitcoin utilizing that as an excuse to go lower, to tap all that money out. So let's see. But what was good about this video, rather than being about just necessarily traditional Forex, it was just a reminder about a lot of the news kind of coming out about core PPI, core retail sales, things falling short at the moment. And, at the moment, obviously, we're sitting at a current interest rate level with the Fed at 4.5. But, there are kind of rumors of, and the murmurings of, we might not see a 75 basis hike, but, at the same time, we might see a 25 basis points hike, and the next opportunity to be taking it just below 4.9. So, at the end of the day, there's still work to be done. And that work is going to be really, we'll find out how much work needs to be done really in the coming weeks as we have earnings season playing out here, just kind of highlighting the US 30 stock indices. And there is a lot of negative movement and negative reporting and kind of across the board. We know there's obviously a lot of layoffs happening, not only just across tech, but across the board generally. So interesting to keep an eye on, obviously, that, but obviously this week in particular, we have Microsoft and Tesla kind of reporting at the moment and highlighting, at least looking on their charts at the moment, we have these gaps obviously representing imbalances in the charts, and where you kind of, where you do gap out, where there is a gap, you usually kind of fill it at some point in time, whether it's, say, this gap to the left, which is eventually filled, or these gaps now subsequently to the right. Question, are we going to, is price going to move down to reclaim these areas and these imbalances in price action? And that's not just in Microsoft at the moment. That's also in Tesla. We've seen two gaps up from its bounce, just shy of the $100 mark. So questions, let's see this week what's going to happen, what kind of news, especially off the back of Tesla reducing the prices across the board on all of their models. So it'll be an interesting and crucial few days. But what I do like, again, there's always kind of, nuggets of gold, and Tino just kind of reminding with all of this heightened volatility as well, not just in the Forex market, not just in the crypto markets, also in Forex, but just a reminder to always be placing out and familiarizing yourself with the ADR, the average daily range, or the average ranges of the time frames that you like to trade within. So in this example, Tino just reminding, this is say for Euro USD, and the average daily range being kind of 97 pips, and him just kind of highlighting and drawing that out. If that's the average price movement that you can expect within a particular day, mark that out, within the sessions that you're trading, whether it's on the hour, the hours and the minutes, whatever that might be, just to kind of preempt, is there on average, has price overextended? Can we expect, or has it been incredibly placid? And can we expect further movement in a future session, whether that be, Europe, New York, or Hong Kong and Asia? So, I think just as a good reminder there. A kind of like running theme as well. There's a lot of S&P analysis and action, that S&P kind of governing all in many ways. So looking at similar charts of one that we looked at earlier, but this is from, Green Star Trading, but bringing some Elliott Wave analysis into this. And I think, what Tom has just been highlighting here is that with this downward resistance line, it almost feels a bit too easy to read. Obviously, we've seen rejection 1, rejection 2, rejection 3, and we're starting to see the fourth kind of pullback and rejection of that. So that being kind of a classical bit of technical analysis. What I kind of liked as well was the further research that kind of Green Star kind of go to in showing, not just what the charts are saying, but what the news and the sentiment being released out there. And I believe this was some research being shared by the University of Chicago at the time, recently anyway. And this kind of notion that we're at all-time lows of consumer sentiment, and from a contrarian point of view, there's that kind of question: is the bad news priced in if we are at all-time lows in terms of consumer sentiment? So something to bear in mind, thinking, playing devil's advocate on that. And I guess from an Elliott Wave perspective, is just kind of pointing out this being looking at the 4-hour time frame. So we'll just zoom out at a further level, but this is still kind of a corrective wave, that this being the B wave up, suggesting that there's a further C wave down. And the only way this kind of bearish count would be invalidated is if we do kind of surpass this 410 price range. So it's something to keep an eye out. And this is the larger, this is the A, that's the ABC, the larger ABC playing out at the moment. So, generally suggesting, further moves to the downside. So it'd be interesting to see how that kind of respects and follows this resistance line and this kind of count. So let's keep an eye, and we'll report back on this as we kind of move forward into the coming days and weeks. But I guess if there was any kind of maybe good news or offshoots to kind of maybe say off the back of that, is that's not just a bearish count alone. That's we do need impulsive and corrective waves when it comes to Elliott Wave theory. But what's interesting about this count, anyway, at least, not to just be harboring on the good news, this is a larger wave 1, wave 2. So following this correction, that would suggest we're going, well into a wave 3. And the good news about that, wave 3 is usually the longest, the most impulsive, the largest. So long story short, the biggest price gain that we can be potentially seeing over a longer period of time, hopefully. So I'm sure obviously that would ring well with all of the bulls at the moment. So let us watch this closely. And finally, just to kind of close again with some on-chain analysis just from Glassnode. They released a fantastic video earlier in the week called "Is Bitcoin Back from the Dead? On-chain analysis market update." So we'll just take a few of the key charts that they kind of released. And what's nice about this new dashboard format was this kind of combining of indicators, 2 signals, and if it flashed positive, it would kind of show up on the bottom line. So the first one was a pricing model whereby there's a combination of, we've got here in orange the Bitcoin realized price, the realized price being the average price at which all Bitcoins are purchased at, divided by those in circulation. So basically if the current price is underneath the realized price, on average Bitcoin is functioning at a loss, and if it is, and vice versa, if price is obviously above the realized price. So while this on this time horizon, from July 2018 to January 2023, we've got no signs of the kind of combined flashing green here, whereby that flashing green being price above realized, but also price above 200-day. But on a much smaller time frame, I mean, this hence the kind of title of "Are These Green Shoots?" question. Both of those have come positive for the first time, all the way since January 2022 up until now, so in the last year. So question, one to watch, but this is only a pricing model. So but another kind of sign of some momentum, we spoke about this as well last week, is obviously we've seen monthly activity surpass yearly activity, so that and that kind of yearly average playing out right there at the moment. So just reiterating what those kind of two colors are. So when the fast 30-day SMA of new addresses breaks above the 365-day SMA, indicates a near-term expansion in on-chain activity, and that's when we get the flashes in yellow. So there is kind of a momentum in that aspect with regards to activity. And then finally, I think just which is always a good reminder is this graph being the R-HODL multiple 90-day uptrend, and higher values against lower values. Higher values, as in these kind of peaks, indicate dominance of 1 week old coins, versus when we get to these kind of lows is the dominance of 1 year and 2 year old coins. And what this kind of is a kind of a simplified illustration of essentially the conversion of old hands to new hands. So we've got everybody who's kind of stacking and hodling at these absolutely very lows, the black being kind of the price action, and that kind of essentially people selling them, hence why it's the dominance of 1 week old coins. It's people who've had them for 1 or 2 years and then selling them at and then becoming obviously 1 week old when sold into new hands. And these kind of peaks do kind of coincide with overheated bull runs and then the subsequent retraction in the market and price. And I guess the kind of final point on that is that we are at those incredible lows at the moment, historical lows, signaling something of a bottom. So it'll be interesting to see how that kind of plays out. Again, something to watch moving forward. And then something just to kind of finish on, which I thought was just a good bit of news, good bit of research from Invest Answers, was this kind of tracking of where the kind of greatest change and the greatest number of developers are operating within cryptocurrencies. And I mean, it's just such a a staggering amount of a 2-year change of up to over 1,000% of Solana developers, taking them in, second place and leapfrogging Polkadot for the number of developers that are operating there. If anybody who's wondering, what's the importance of developers, does it have an impact on price or anything of the sort? It's just kind of a loose aphorism, kind of following how from the early tech days, there's always a kind of saying of don't follow companies, follow the developers. And, you had the amount and the kind of quantity and onboarding of developers at the likes of Microsoft and others on the earliest days. So there is something to be said about the amount of activity, the amount of tension, and the amount of technical talent and ability that is going into a single space. So an interesting kind of fundamentals point behind the kind of staggering Solana price action at the moment. And that concludes kind of the news for this week. Just wanted to thank you all for obviously listening or watching. Like, comment, and subscribe, and we look forward to kind of tuning in next week. Ciao.